Thanks for watching France 24 and welcome to the business interview. I'm Marcus Carlson. Today we'll be talking about mergers and acquisitions and about one of the biggest M&A deals so far in Europe this year. We're speaking to Jean-Pierre Clamadieu, the chief executive of the chemicals company Rhodia. It recently accepted a 3.4 billion euro takeover offer from the Belgian competitor Solvay. And if they get the green light from regulators, Rhodia will soon be snapped up. Jean-Pierre Clamadieu will be serving as deputy chief executive of the combined firm, and he's been tapped to take over completely when Solvay's current chief executive steps down. Welcome to the program, Jean-Pierre Clamadieu. Let's talk about this deal with Solvay first of all. You obviously think it's a good deal. Why is that?
Well, it's a very good deal because Solvay and Rhodia are two companies of similar size, 6 billion euros of sales, 15,000 employees. And when Solvay approached us, their project, which is now our project, was to build together a new entity which will be among the largest European-based chemical company with a strong position in emerging markets. So we think that this project is very nice because we will be building together a new company based on the strength of Solvay and Rhodia.
No reticence about working for the Belgians. A lot of French people will probably turn their noses up at the thought of a French company being taken over by a Belgian company.
I think it's the wrong way to look at this deal. This deal is about building a European company. And it's, I think in terms of culture, we are not very far apart. In terms of history, both Solvay and Rhodia has very long histories behind them. In terms of culture, we are engineers, chemists. So I think that we are close enough so that putting together this new European company is something which is a very exciting project.
Rhodia has a strong presence in emerging markets. You make around about 50% of your sales in emerging markets in Latin America and also in the Asia-Pacific region. Seeing that that's where we're seeing growth today in the global economy, couldn't you have made it on your own, Rhodia as its own entity?
In fact, the strategy we are putting in place was a strategy of growth and a strategy of growth in which Rhodia could continue as a standalone entity, clearly. And we were organizing ourselves for that, and I think we had the resources. But again, when Solvay came and said, what if we were putting our forces together with a stronger balance sheet, a broader array of businesses, complementary positions? For example, Rhodia is very strong in Brazil, very strong in China. Solvay has a strong position in Southeast Asia and Russia. So we think that combining this strength would help us to go faster and achieve obviously greater results in a chemical industry in which consolidation will take place. We are seeing year after year one big animal snatching, as you say, at a smaller one. So this gives us, in fact, the control of our future, and this is one of the nice features of this deal.
Where are you going to be making money in the future in terms of products and also in terms of regions?
Well, in terms of regions, the challenge is clearly to make money everywhere. But in terms of growth, clearly Asia and Latin America are absolute keys. I think the future of the chemical industry will happen in China. Because what's at stake in terms of market is enormous in this part of the world. So being able to take the right position at the right time is very important. And Rhodia has the opportunity to build a very strong base in China. We've been operating in China for 30 years. And in fact, today everyone talks about China. But 30 years ago, there were not that many Western companies starting to put plants on the ground in China. So this is one element. Brazil, we have also a very strong position there. And in terms of market, the answer is very simple: green product. And when I say green product, it's another simplification, but sustainable development is clearly one of the big trends that we see today in most of the market that we serve. And being able to
so it's all about making chemical products environmentally friendly, so to speak.
Yes, and it's also about bringing to our customers the tools, the solutions, so that their own product will be environmentally friendly. Let's take a very simple example: automotive industry. We sell 20%, we have 20% of our sales with the automotive industry. We sell to this industry three products: plastics, silica, which are used to make energy-efficient tires, and rare formulation, which are used in throughway catalyst. All of this product allows car makers to develop cars which consume less gasoline, which emit less CO2 and less local pollutants. We see that as a big trend in all the sector that we serve, and coming with this product will allow us to be winners in the future.
You had some very strong first quarter sales. You had a record first quarter. What do you say about the outlook for the entire year?
We expect to continue on this trend for the remaining 3 quarters. I might sound a bit optimistic, but when I discuss with my counterpart, we see a situation in which the growth dynamic in most of the region is continuing as it is today. And when I look at the specific portfolio of product for Rhodia and the products which respond to this priority on sustainable development, I think that we will be able to play our cards very well. And this allowed us this morning to increase the guidance that we gave for the full year. We expect now to generate more than 1 billion euros of EBITDA in 2011, around 500 million euros of net results. So overall, we expect 2011 to be a record year for Rhodia. And not just a nice fireworks and then things going back to normal. No, I think we are clearly on a trend of significant improvement in EBITDA year after year based on the growth strategy that we've put in place and that we will be able to execute more effectively within the Solvay framework.
Let's go back to the possible merger with Solvay. Solvay will be taking a lot of Rhodia's debts and also pension liabilities in this new merged company. A lot of people are saying that could be a problem. What do you say about that?
No, in fact, Solvay is buying Rhodia for an enterprise value of 6.6 billion euro, which represent a bit more than 8 times EBITDA. So that's a good number, good enough at least for us to recommend the offer to the shareholder. But it's something which falls within the framework of similar
But what about
takeover.
the 2.5 billion euros
then
worth of debt and pension liabilities?
Yeah, and then when you look at the enterprise value, you have to take into account the specificity of Rhodia. We have a significant amount of pension liabilities, but at the same time, our market cap is smaller. So in fact, the total value is 6.6. As you say, 3.4 billion will be used to buy the equity of Rhodia, the shares of Rhodia, and then the rest will be taking over debt and pension liabilities. But overall, a deal which is, I think, good for both companies. And what's interesting is that we've seen the stock price of both companies moving up, which is always a very good sign when you announce such a deal.
Now, a lot of analysts are saying that this could be the beginning of a wave of mergers and acquisitions within your sector, within the chemicals industry. Is the new Solvay going to be looking at some other companies, some new targets? Are you already looking at the future, so to speak, from a mergers and acquisitions perspective?
To answer to your question, first, yes, I think that what we are doing today gives a sign that bigger is probably a bit better in the chemical world, and that companies which are below 10 billion euros of sales, global companies which are below 10 billion of sales, will be facing some challenges. And that combining the two entities and getting very quickly to a company which will be around 15 billion euros of sales give you more freedom of action. So that's the general. And yes, I think we will see other M&A activities. As far as Solvay Rhodia is concerned, yes, I mean, we want to continue to be an active player in this field. First priority will be integration, but we will be looking at opportunities to grow and make sure that we play our cards well within this game.
But do you have any targets already in mind, just very briefly?
No. Today we have, each company, Rhodia, has some focused acquisitions target, which means rather limited in size. But as soon as we'll get together, I think we'll start thinking of what could be the next significant opportunity that we can look at.
I want to talk a little bit about your own personal feelings about this merger, because when you took over Rhodia in 2003 as chief executive, the company was in dire straits from a financial perspective. You had some real financial problems, but you nursed this company back to health. When you see this company being sold off, it must be a little bit of a bittersweet feeling about that.
We've negotiated this deal during 5 weeks, just a couple of months ago, and which is a very short period of time. It takes me probably a couple of weeks to let the feeling on the side and look at the merit of this deal. But yes, it's difficult. I mean, when you've spent so much of your time and energy putting a company back on its feet, when you've worked so much with the teams and when you've been able to achieve this transformation with your teams, going to the next step is always difficult. But very soon we were able to put the feelings on the side, and I worked with a couple of close colleagues, and we said, okay, this deal makes a lot of sense. And what was very good is that when I communicated with my team, it took less than a week for most of our employees to be convinced that this project had a very strong logic and made sense. People have plenty of questions. What will it mean for me? What will I be doing in the next in the new company? But they all think that this is a great opportunity for Rhodia and a great opportunity to continue this adventure in a different environment with new challenges.
So you cut all the emotion and it's strictly business from now on.
It's strictly business, but still with the feeling that we've done great things together, the Rhodia teams, and we'll have the opportunity to continue that in a different environment.
Let's talk a little bit more about one thing you said there. There's a lot of people saying that you're going to be taking over after Christian Jourquin, who is the current CEO of Solvay, when he retires. When is that going to happen? When are you going to be the big boss, so to speak?
Well, it should happen in the next 18 months.
Okay.
Christian is 63, and there is a limit in the statute of Solvay. But it will be a very orderly and well-organized transition. We'll have a lot of work to do with integration. I will be specifically in charge of integration as soon as the takeover process is completed, and then we will make sure that for all of our teams, we will be able to have a very smooth transition between Christian Jourquin and myself.
And are you going to change the company's strategy once that day arrives?
Well, I think putting together two companies of more or less the same size and creating a much larger one, yes, I mean, we'll have to adjust the strategy, but it's not so much because I will take over, it's because we will come to the conclusion jointly that there are other opportunities, other priorities, very much based on what we've been able to achieve separately, but with all the dynamic that we are creating with this integration.
Jean-Pierre Clamadieu, it's been a pleasure to speak to you. Thanks very much indeed for taking the time. And with that, we're going to wrap up this program. If you have any thoughts or comments on this program, don't hesitate to get in touch. You can message me on Twitter, and the name to look out for is Marcus F24. Thanks for watching France 24, and do stay with us.